All right, the seventh budget by the Union Finance Minister Nirmala Sitharaman and the first one of the Modi government has been tabled. It is lead to leap, which means the promise of continuity in terms of ensuring that Indian economy remains on the strong wicket. It continues. Fiscal prudence, fiscal deficit is targeted to come down. Assumptions of tax and growth are realistic. Very important that the capital expenditure as percentage of GDP at 3.4%, that has not been compromised. And there is a big allocation which is coming in urban housing of nearly 1 lakh crore. Now that's something which markets liked. But what markets perhaps are, I won't say worried, but where markets right now are trying to understand is that why has there been a change in rate of long-term and short-term, why the duration has been changed, and why the STT on futures and options or FNO has been increased. I guess the messaging here is that equity as an asset class has always enjoyed what could be called as premium positioning, and looks like the government feels that the premium positioning should come to an end. The market reaction, the first one is knee-jerk. Is it panic? Is it something which will get settled? We'll discuss that, we will debate that. But for me, the big picture is very simple. Leap to lead, continuity has been maintained. The fiscal prudence has not been compromised. The near-term fix, which is fixing the rural sector, that indirectly will get a booster from the real estate sector. And the capital expenditure as percent of the GDP, which has been the hallmark of the Modi government, there has been a promise on that. A lot of several changes in terms of fixing job, fixing skill development. So I would summarize the budget in the following manner. Short-term concerns of rural and rural stroke consumption, they have been addressed. Medium-term continuity remains, and the vision document for long-term does. While equity market participants may say, was there a need to increase taxes? Well, some would say that equity has enjoyed a preferential asset class and it should not continue. Swami sir is ready. His voice really matters, and his voice is always the first voice. Good afternoon, sir.
Hello.
Hi, sir. We can hear you. Can you hear us? Everybody is waiting for your verdict.
Yes, yes. Bolo, you want my... Okay. It is a fabulous budget. I do not think people could be happier than with what they've seen. The macro scene is magnificent. Already we were bringing down the fiscal deficit to 5.1%. It's further down to 4.9, with every prospect of bringing it down to 4.5. I had not thought 5 years ago that you would be able to do this so quickly. So hats off that you have achieved this. You have achieved this at the same time Capex has gone up very substantially. You have managed politically to satisfy to a fair extent both Andhra Pradesh through support for the new capital and to Bihar for flood-prone areas and for all the new tourist hubs. At the same time, there are no great freebies. The Prime Minister is not in favor of revenues. But on the income tax side, there have been a number of breaks. The cut in long-term capital gains tax to 12.5% will be welcomed by the investing community, and this should, I think, spark a boom in the capital market. Already our multiples are very high. I think they will go even higher. There has been some increase in the exemption limits for income tax, which will help the middle class, although you may argue this is no more than compensation for the inflation in the last 5 years. But overall, a great macro, there is stability long term, there is you have managed to combine high capex, satisfy your political allies, you have managed to provide something for the middle class, and there is the great capital gains tax cuts for the community and something for the foreign direct investors, a reduction in the tax. Totally, I think for the financial sector, for the stock markets, for the corporate sector, this is great news. I do not think they could have asked for a better for a better budget. So I am not usually so effusive in terms of a budget speech, but I will say this budget deserves the most effusive support from all analysts.
You know, Asha, we can talk about, okay, the whole stock market community and nobody likes to pay extra taxes, why fix if in broke? We can get into that spirit of it. For me, the big picture is, are you getting India future ready? Are you ensuring that the path of progress is maintained? Are you ensuring that capital expenditure is not compromised? Are you ensuring that a large sector like rural India indirectly, is it getting a push? I mean, the easy way for them would have been to give a dole out. But what you're essentially trying to do is that inject that 1 lakh crore from RBI back into the real estate sector, urban housing, and that in a sense will have a multiplier effect. But I can tell you, out of the 2 market participants in our studio, one is very happy, one is very unhappy. Vijay Kedia, you told us...
Vijay Kedia actually predicted this minutes into the budget, that there will be an STT and an LTCG hike both.
Yes. Yeah.
So are you happy about your prediction or the fact that the taxes have been upped?
No, I'm happy about it.
You'll have to pay more taxes, you're happy about it.
No, let me tell you.
You're the first person who's ever saying this.
No, it's okay, 12.5%, it is okay, because I was expecting 20%. You know, so it is 12.5% only. And as I said, that hardly 1% people hold their shares for one year and beyond.
More than a year.
And there is saying, Nikun, you can please some of the people all the time. You can please all the people some of the time, but you cannot please all the people all the times, you know. So ultimately, I think it was bound to come. As I said earlier before the speech to Aisha, you know, there are working hours and there are happy hours and there are hangover hours. So this is hangover hours is going on into this market. You know, so there has to be some stick to cool down. So I think Nilesh
will not agree with me.
Nilesh is unhappy
yes,
for
okay,
sure.
Yeah.
I think logically, rationally, who's going to be happy with more taxes?
Of course.
Okay, we are all humans, right, at the end of the day. But I think if the capital gains tax was hiked, STT is hiked, I think probably dividends, tax on dividends in the hands of the investors, that should have been done away with.
But Nilesh,
okay, because that's double taxation.
Nilesh, quantum, let's look at quantum. It's like 10 becoming 2.5. And the long-term, generally definition you're trying to increase. One side we are saying that, look, don't worry folks, India is getting long-term SIP money. That is the India story. For an SIP investor who's coming into India, if that is the India story, and if the F&O market is become frothy, then checks and balances have to come in. I mean, just think about it. I mean, if India is the SIP story, then nothing changes there.
No, fair enough. I think the STT on F&O, I think is a step in the right direction. If the idea is to essentially curb volumes on the F&O side, I think that's fair enough. I'm just saying is that for a long-term investor, there is STT, there's a hike in LTCG, and there's a tax on dividends as well.
Okay, Swami sir, you've called this budget, I would say 10 on 10, because in the previous budgets you've called them 6 on 10, 7 on 10 when you not like them. But can I say with the tone of your first take, this budget in your book is 9 on 10 or 10 on 10? Swami sir, in the past, when you've not liked the budget, you've not shied away from giving it ratings like 5 on 10 or 6 on 10. But today, would you say that in your book, sir, this is, if not 10 on 10, it is definitely 8 on 10 or a 9 on 10?
Okay, I'm a conservative guy. I don't think I've ever given more than 6.5. To this one, I will give 7%. 7 out of 10.
Why not 8 or why not 9? Because you've just said the budget is something which everybody should be happy about. So why is Swami sir being conservative?
I'm being conservative because this has not been accompanied by what you might call policy statements. You know, there are, of course, the budgetary statements. But you know, in the past, the budget was an occasion for major policy statements on other sectors. So right now, I mean, which are the big problems? There are problems, for instance, on land acquisition continues to be a huge area. Labor laws continues to be a huge area. The fundamental issue of the pollution that we have 6 out of the 10 most polluted cities in the world. There are a large number of areas I would have wanted more things on those areas. I would also say that while the stock market will be very happy with the 12.5 cut in long-term capital gains tax, I would say we need to have an exercise on how do we equalize our tax rates roughly with those of our competitors. I would have liked to know what are our competitors offering and what are we offering and how are we trying to get towards that end. But as I said, you cannot expect one single budget to cover absolutely everything. And Sitaraman does not seem to be in the Manmohan Singh mold of making major policy change announcements along with the budget. So had she done the Manmohan Singh thing of large number of policy change, especially in these difficult areas, then I could have given her 8 out of 10 or 9 out of 10. But if you ask me, by my standards, 7 out of 10 is damn good.
It is. We can vouch for that. We have all your ratings for the past budgets on record. But Swami sir, great to have you on the show. Thank you as always for your quick analysis on the budget, which he says is pragmatic and a good one, or for that matter, the best one that we've seen in the recent times. I want to quickly just mark what the equity market reaction has been to the taxation changes, because we're down about almost 1.5% at the low point, a knee-jerk reaction, but now you're seeing a 0.5% recovery coming in. It's still early days yet. You won't call this, the closing finale. We're still down a good over 200 points on the Nifty, 271 on the Nifty futures right now. And look at the texture of the stocks which are falling. L&T is down about nearly 4%. ONGC is your biggest drag right now. That's down 4%. And I want to come to what's happening within the broader end of the market, because that's taking a sharper fall. Chambal Fertilizers, Nalco, Vedanta, GNFC, BEL, a huge gap down, HAL, India Cements, all of these stocks are the ones which are cracking. Vijay, I think the question is, how much of a knee-jerk reaction would be okay?
According to me, whatever knee-jerk reaction had to come had already come because of the budget and all. Because everything is now clear. Now, according to me, this 12.5% capital gain tax was the actually main hangover to the market.
Yeah.
Okay, and STT, VSTT, those things are bound to come. And I think more restrictions are going to come from the SEBI side also later on, just to curb the speculation in the market, to curb the satta in the market. So far, LTCG is concerned, I think it's a very reasonable hike, and the market will ultimately like it. And I think budget has come and gone.
I'll be.
So this 1% fall you're saying is it on the index?
I think so. It's just a fluke. I think so. It's okay. It's over now. 12.5% is nothing. 12.5%.
I'm coming to you for the Deloitte view, but I just need to capture some more market views here. Nilesh, a quick 30-second answer before we get in. Sunil, Prashant, everyone's waiting. Do you think, like on the election day, the market was bought when there was a big decline? This also is going to be a good buying opportunity, because look at the fall. I mean, there was panic which had to happen in a market which is an extended market where mid and small cap stocks have become Humpty Dumpty, valuations are rich. The fall has been bought into. Guys, let's look at the intraday graph. As of today, I don't know what happens tomorrow, but today the fall's been bought into.
No, that's because there are several measures to boost the economy.
Exactly.
Okay, I think the market will get back into the fact that there's a 3.4% of GDP allocation to infrastructure. Two, there's an unprecedented focus on urban housing, which I think is going to be a huge boost for the entire economy. The third is the whole focus on MSMEs and helping MSMEs to access credit better, more credit, again is going to be a huge booster dose for the bottom of the pyramid as far as the economy goes. I believe these are the three big initiatives on which the market will start to focus. These are initiatives which will boost growth, which will boost earnings, and at the end of the day, over the medium to long term, what matters for the markets is economic growth, earnings growth.
Prashant Jain, there is good news and there is bad news. Let's first address the bad news, which is that taxes have been changed, duration has been changed, STT on FNO has gone up. Do you think markets are likely to digest it, or this could impact the P multiples and the short to medium term trajectory? Prashant Jain, is my voice reaching you?
Yeah, Nikunj. Yeah. Sorry, I didn't hear my name. Yes. So, Nikunj, I think these changes are, I am not upset with them. I think this changes, the taxation changes are very equitable. So, low income groups have reduced incidence of tax, and the upper income groups, especially through capital markets, some taxes will go up. But I think overall, this is a great budget, and I am honestly not disappointed by anything in this budget.
Now let me get a voice from from the Deputy MD of India's biggest fund house, DP Singh. Mr. Singh, how do you see markets and flows getting impacted because of the change in long-term, short-term, and also the change in the tenure of long-term?
Nikunj, I don't think I absolutely agree with Prashant that when he says that I don't think there's going to be any change, except for one category, that is the arbitrage funds and mutual funds, which will become little less attractive. Other things, I don't think because of this 10% or 12.5% will impact. And people, especially the money, with most of the money is coming through SIPs, and SIPs putting money for a longer period. So this 1 year to 2 year is also again not a big issue, except for that one category. And the category will become little less attractive, but it will still remain attractive vis-a-vis other funds. So no big change. As I said in the morning, these tweaks were minimum expectations that this will happen. Anything above this would have been little more, but this is what was on the cards already. And good thing is nothing has happened on the from mutual fund industry point of view. The more money in the hands of consumers, I say that some of the money which is intended to go into consumption actually comes into investments also, because mutual funds is getting subsidized, and it's more and more money will come into, and I'm happy with the overall budget.
Purinju, how much of a damage is one bound to see because of the taxation changes on equity markets?
There won't be any damage because of slight increase in the capital gains taxation. In fact, market is very strong today, despite capital gain tax increase. That's very, very important to notice. Normally, in this kind of situation, the markets would have gone down by 500, 600 points, maybe much more in Nifty. So it shows the resilience of the market, the fundamental strength. Market have been looking for the direction of the reforms. That's very much reaffirmed in the budget throughout. As you know, it's a massive push for the digital public infrastructure. It's very important. I think in the morning we were discussing about protein in one stock. I think that stock went up by some 10% today. Maybe today, right now it may be 3-4%. I don't know. So so again the market reaffirms that it is fundamentally very strong. Structural economic growth is very much out there.
I'm just going to get a view from Deloitte.
Bottom up, have the bottom up.
Okay, I'm just going to get a view from Deloitte here. Can you just break it for us in terms of, so there is one headline number, small, short term and long term, and then there's a surcharge on top of that. What would be the effective tax rate now for short term and for long term?
So for long term now, effectively it's 12.5 that was talked about. Plus the question will also be that they've hiked up the basic exemption from 1 lakh to 1.25. Okay. For short term, for financial 20%, but otherwise you will fall under the category of the normal rate, which can go up to almost to 39% depending on where you are. So that's the quick headline. Of course, we'll have to see the fine print as it comes across to see if they have done further simplification beyond what the FMS mentioned in the speech.
What is the big headline according to you?
To me, I think in terms of the tax rates on cap gains, I think, see, this was, in fact, if you go back in a year or two, it was expected that they will bring in rationalization. To be honest, I was just checking in other countries also, you don't have so many multiple rates across time. So people were going, probably from a timing perspective, it was thought prudent that right now is a good time to do that as distinct from any other time. So that's what my take is, that probably they saw that this is the right time to kind of do the rationalization and bring in, and as some of the co-panelists were saying, 12.5% on that is in some countries it's even higher. In some cases they completely exempt capital gains on considering as something that gives impetus to growth. But today, if you are in FM's position, you need to raise revenues from somewhere. If you are going to give push to infrastructure, to R&D, and as, I guess this was an area where she felt that she can raise more revenues for.
clarify on the point that Nilesh was mentioning, taxation on the foreign companies, if you have the nitty-gritties with you.
Yeah, so what is happening is that today you have Indian companies, okay? Indian companies are taxed effectively. If it's a new manufacture, it's around 25% or it can go up to 34. Now, overseas companies operating, let's say for example, there are bank which operate by way of branches. Now, they had been taxed at 42%. Now that has gone down. So if you see foreign banks or foreign airlines or shipping companies, those, because they operate as foreign companies in India, and the logic being that they were taxed at a higher rate considering that you would pay corporate tax and then normally you would pay dividend. So whatever is that additional tax rate was coming to around 42. So that's how the maths was, but they are probably making more attractive for even foreign companies
Foreigners
to
to come
operate
and invest.
directly.
Makes sense.
That's
Okay, so Prashant, I have another follow-up question for you. The P multiple for India started going higher when the corporate taxes came down. The flows into India started coming via the SIP and via the sheer attractiveness which equity as an asset class had to offer for genuine long-term investors if they compared that with other asset classes. But now that this tax arbitrage is coming down, which means less cash flow and you have to pay more taxes, what happens to the average attractiveness, Prashant? I come back to that whole factor once again with you.
I think, Nikinji, if you go back, I mean, last year fixed income was made fully taxable. So actually, over time, the arbitrage between or the concessional rate of equities has actually gone up versus fixed income. And what these tax highs do, I mean, they reduce that arbitrage or concessional concessions a little bit. So I think that this is quite okay. And so the we should not the market's correction, we should not, to my mind, attribute it to the budget. And as we have discussed, sometimes the markets are not cheap. So it is certainly a time to tone down return expectations. And as we have discussed again in the past, the small mid caps, to my mind, appear to be relatively less attractive. And that's why you are seeing a deeper correction there.
DP Singh, again the same point. Perhaps this is the most important point that for someone who's reading the headline now gets a sense that, oh my God, ये क्या हो गया? Taxes have gone higher. STT has gone higher. एक साल का 2 साल रखना पड़ेगा. What changes according to you for a investor? DP Singh.
No, I don't think, Nikon, there's going to be any major change. The people, in any case, the people who are putting for long term are keeping for 2 years plus. Nobody's getting money out in 1 year or so. There will be some less attraction, but I think the number of people who are getting into the market, especially through the SIP route or STP route, they are going to be there for long term. And the people who are already there are already across the long term this thing. I personally don't feel any big impact on this. Yes, knee-jerk reaction will be there. Whatever impact is there will be normalized, neutralized by getting more number of people into the market through institutionalized route like mutual funds. I'm not worried about at all about the growth of the industry.
Okay, Sunil Singhania is also ready. Can we say hello to him? Oops, I wasn't told he's ready. Maybe he's also trying to understand by market mein ho kya raha hai. Prashant, in terms of the way how you've invested in the past, you always prioritize expenditure over consumption, which is that Capex over consumption. But given that there is a decisive push now which is coming back towards stroking consumption, 1 lakh crore allocated to urban housing, focus on job creation, do you think it is time to start looking on the other side also?
I don't think so, Nikunja. I mean, I think the next few years and the last 2 years, I think investments have grown and will continue to grow faster than consumption. And consumption stocks are, to my mind, pretty expensive. And see, we are getting disappointed with Capex hike after a massive increase in last 3 years. I mean, governments, I mean, as percentage of GDP, Capex has gone up from 1.7% to 3.4% in last 3 years. We can't expect it to keep on going up. So I think this is because we also need to deliver on fiscal consolidation. So I think, I mean, to my mind, I don't think much would change on the consumption front. See, consumption grows secularly. It is less volatile than investments. But there are times when investments will grow faster. So I think uh, consumption stocks, especially the consumer staples, are pretty expensive in my opinion.
Nilesh, couple of other pointers as well coming in from the budget, right? Focus on energy security, infrastructure, urban development. Again, a thrust on manufacturing and services. Does the investment landscape change? Because these are the sectors which, in any case, have been doing well, and the market's completely concentrated on those.
Yeah, but I just feel that these sectors continue to get a longer runway of growth. I think the investment thesis gets further solidified as far as these sectors are concerned. And honestly, these are the sectors which need to continue to be provide focus and fillip so that India's growth rates remain high, remain elevated, and we truly get onto a path of moving towards a $7 or an $8 trillion economy in the next few years. And I think to get there, we need that focus on these sectors. So I clearly believe that this budget focuses a lot on the real economy. And that is something which probably yet is getting kind of ignored in context of some of the tax hikes. But otherwise, I clearly believe that this has been a budget for the real economy. This has been a budget for really the big sections of the economy which can continue to turbocharge the economy. And that's the right thing to do.
You know, the other thing, Aisha, which is important to think through is that, look, what is the other good thing here? The fiscal deficit number has come down to sub 5, right? Expenditure cycle continues. Capex revival comes back. Inflation globally is coming under control and bond yields are coming down. So this also is something we need to start saying, oh my God, where is fixed income? We are hardcore equity guys, we don't think fixed income. Where is fixed income? What about balance funds? Singh Saab, I'm just saying what you would love to hear from me. Fixed income. Maybe he's getting a call from some fixed income distributor. That's what I can say.
What kind of calls is Sunil Singhania though getting after the taxation change on capital gains on equities?
I guess
Sunil, what's been your reaction? Although the Nifty move has been just so brilliant. I mean, every dip gets bought into. Look at the Nifty intraday graph. We're less than 1% lower right now. And the Nijek, less than 0.5%, sorry, not even 1%. It's been a 1% recovery that you've already seen play out. And all those PSUs which crack your HAL, BELs, all of them have seen a V-shaped recovery. Sunil, what's your take?
Oops.
Sunil, you got to unmute yourself.
Sunil's got a call.
Frantic
He's getting a call from a guest team. He needs to be on air. Guest team, don't call him. Sunil is already on air. So, budget, it happens. Nilesh has been a veteran, so he now puts the phone on silent. He knows how to handle those calls. Thank you, Nilesh. You've just been.
Thank you so much.
We've really understood the whole, like they say, the KRA of a budget programming.
Thank you.
Sunil Singhania, we and Aisha were thinking that what's the first call which you got after the budget? And I'm sure it must be from ETA Guest Now team. Kahan par ho Sunil bhaiya? When are you joining the channel?
I think budget has become more about guests and coming on media rather than hearing the speech itself. And frankly, not hearing the speech is better, I think.
Okay, what happens? I'm asking this question to everybody.
Yeah, because if you see the price, you feel like nothing happened. Exactly. That's, things are as is.
So, Sunil, if you would have constructed a scenario in the morning that long-term changes would happen, short-term changes would happen, STT would come on FNO, then predict the market level, everybody would have predicted a different level. But the fact that these changes have come through and markets have really recovered, what does that tell you? Time to move on?
So I think, Nikunj, we have seen this many times, and that's why I always say this, that worry about things which are in our hand. Things which are not in our hand, what is the use? So obviously, markets are all about expectations and what actually comes in. So, we started with no expectations in terms of changes in capital gains, and therefore the small increase in capital gains tax is definitely not welcome. And the other thing is there are some uncertainties regarding the buyback tax. Obviously, STT has got increased. I am hoping that it is only for speculative transactions, not for not for delivery transactions, because the whole purpose of STT was in lieu of capital gains tax. So now we have capital gains tax as well as STT. But all said and done, Nikunj, if you are looking at a 15% return going forward, a change of 2.5% in long-term capital gains tax reduces your returns by maybe 30 basis points. So we'll have to work hard to make 30 basis points more than the 14-15% we were making. It's as simple as that.
So if we look at the consensus, and I'm just going to, we'll put this bite on digital. Experts who've come on the channel, Prashant, Sunil, Nilesh, Vijay, DP Singh, all of them are of one simple view that ye to hona hi tha, which is short-term tax change and long-term tax change had to come. Markets are likely to look beyond that because the budget indirectly has a definite push towards economy and focus on real economy. So as long as the underlying economy is growing, and if you see a growth potential which is in double digit, so what, you have to pay slightly more. As long as that growth in the market or upside in the NAV is coming because of earnings, not because of tax arbitrage or speculation. The ability of the market to shrug off bad news, I think, is extraordinarily strong. It did this on the election day, now it is doing on the budget day. On a day when taxes have gone higher, the market reaction has not been very magnified or amplified, which was a market. And bear in mind, equity markets are very sentimental in nature. They tend to react and overreact in the short term, but the reaction, I guess, has not been brutal. It has not been excess. It has been very measured. I think that is how we want to just summarize the message coming from a panel. Prashant, I want to bring in that entire fiscal discipline path, and what it means for the aggregate picture, because fiscal discipline path, interest rates coming down, these are the factors which in a sense are going to be long-term boosters.
Absolutely, I think we are ignoring that part, see, because the whole focus is on some taxation around capital markets. But look at the fiscal progress, I think that is great, because if you lower the cost of capital, I haven't checked the 10-year bond yields, but my guess is they will move lower. The government's gross and net borrowings are smaller. And I think net, I feel there is a lot of focus on improving ease of doing business. There is stability in indirect taxation, though she has promised a comprehensive review on both to simplify these taxes and to correct any inverted duty structures. And there is fiscal consolidation. So lower cost of capital should over time automatically lead to more capex, faster growth. So I think net, this is to my mind, a great budget, and there is no reason why one should be pessimistic either on the economy or on the markets.
Right. Purinju, I recall 2 months back when we were chatting with you around the election verdict time, you were talking about as to how you're extremely bullish on farm and agri as a theme. I guess this budget should only sort of, solidify that view of yours as an investment thesis, Purinju?
Yeah, they could be steady to better. I'm not very excited, or it's not a very exciting theme, but somewhat safer theme because that sector was not doing well for a while. That's why I was focusing on that, the agrochemicals or fertilizer input or fertilizer or other agri input, and for creating jobs and reducing the rural stress. Government has to allocate funds and focus on the rural and agri area. So that's all. But now a market is giving more importance to the tax on capital gains. I feel investors should, rather than looking at the capital gains, whether 10% or 12%, they should focus more on whether these companies can grow in such a way they can create capital gains. So you have to pay tax only if you make capital gains. So that macro environment for these corporates or the companies where you have invested in, whether they can grow well and create capital gains for you is most important. I think market has become very matured. That's the reason it did not react very badly for this capital gain tax increase. And everything is always well in the market. I think that's why in the morning also I mentioned it will go almost like a non-event, the budget for the markets.
Sunil, in the scheme of things which you invest, which is 15, 15, 15, 15p multiple, 15, return ratio, what changes in that 15, 15, 15
I
bracket
think
of yours?
what has changed over the last 2 years is getting the 15p. You know, nothing is cheap. The good thing about Indian corporates are that there is huge discipline in terms of capital allocation. So there are many, many more companies where there is a clear visibility of 14, 15% return on capital employed. And profit growth of 14, 15% is also not tough. I think what is tough is getting stocks at a particular valuation. So, let's see. I think I would tend to agree that as far as this budget is concerned, everything else has been a big tick mark, except this capital gains tax. But let's see, we'll have to read the fine print. Obviously, Nikunj, no one likes to be taxed more. So, none of us would like to pay more taxes. But, you have to move ahead in life, worry about what is in your hand and just take things in your stride. As I said, you have to make 0.5% more gross returns to pay for that extra 2.5% of capital gains. So we'll work harder.
A lot of sectors and stocks are actually reacting to the budget announcements. For instance, the PLI scheme for automobiles and auto components, that estimate, of course, has gone higher. While the budget missed out on healthcare, there's definitely been a mention on cancer care drugs. There's been an allocation for production-linked incentives, that's MATI. There's been a focus on electronics, manufacturing, that's clearly, quite encouraging. No change in tobacco taxes. Look at the way ITC is flying up. It's one of the top movers on the index right now, sitting at a 4.5% gain. A focus on housing, of course, is a welcome. This focus in pharma and agri, which has been quite encouraging. But, Hemal, if I could just get you in, I know we're obsessing about the cap gains, but other than that, other than equity markets, what are the other taxation changes which you can read through in the fine print?
So I think I see a tremendous focus on simplification. So whether you look at it in form of unveiling the new Direct Tax Act, which the FM is saying over 6 months, or she spoke about the GST inverted duty rationalization, she spoke about TDS rationalization, charitable trust. So I think the idea is about ease of doing business, make it a more simpler part of it. The other point is about on expected lines. We did discuss before the budget that we expect Vivad Se Vishwas scheme to get rid of some of the litigation. I think she has announced. I think that is a welcome move by a lot of corporates. Leaving more money in the hands of the individual is one of the things that was also on expected lines, the standard deduction to go. So you leave more money because there has been a growing shift to promote people to go to the new tax regime. So that is what I did like. Something that stand out is this entire employment related incentives. So the PM scheme of the new joiners, whoever joins in the pension provident fund, you will be incentives. So what is announced is any first timers registered with EPFO, you get 1 month's salary of 15,000. I think that's a big sum. Plus you get support to the employers of another 3,000 per month for 2 years. That's a big chunk. And what I think this will do is you'll get a lot of credible data of new employment generated. If you go back, there has always been an issue that, okay, how much employment is generated? You have relied on EPF. But by giving these incentives, it will promote a lot of employment. And I think you'll get a lot of more credible data that will be, that cannot be refuted as such.
See, Aisha, I'm just thinking through it, and now you think through it. There is coalition politics compulsion. There is no coalition politics compulsion in this, unlike what everyone thought.
Besides some higher road allocation, I think, to Bihar.
Yeah, but those are ignorable facts.
Yes.
Those are not compulsions. Those are not real compulsions, what we've seen. So this another budget also, in a sense, puts lid or caps this whole concern that ab ki baar mili-juli sarkar hoga, economy mein compromise. That whole view which market had, that also gets nullified in a sense.
Arrested,
And Prashant, that just brings me to a sector which you've liked in the past, and that has worked like a charm. PSUs and power. And the fear of coalition politics now has been taken care of. No more. It's not like there is free bijli, free pani, which has been allocated in this budget. So will the bull run in PSUs and power continue, Prashant?
I think that space is close to fully priced into my mind, and I think it has got less to do with the budget. But look at the returns over last few years, anywhere between 5x to 15x. And these are growing businesses, but when a stock moves up 5 to 15x, market is pricing in a lot of growth. So I would be, these are good businesses. Some of them may still give some returns over medium to long periods. But by and large, I feel, especially the manufacturing and the defense pieces, to my mind, they are pricing in a lot of growth, and the risk reward, to my mind, is not favorable. Power, I think, is still okay. So it doesn't seem to be overvalued to my mind.
Look at the OMCs right now. The capital support of that 15,000 crore rupees is not going to be part of the FY25 budget. Equity dilution overhang is clearly gone now for OMCs. You can see a big recovery play in there. Dixon, of course, is the most preferred EMS play. There's been a proposal to reduce the BCD on mobile phones, the PCB and mobile chargers as well to now 15%. Look at the way some of these jewelry companies, Titan, Senco, customs duty reduction has happened on gold imports now to 6% from the earlier 15%. That's a drastic move. Look at the intraday graph of some of these names. Senco has spiked up nearly 9%. Kalyan Jewelers was in any case was a strong one. But look at the move on Titan right now. It's a top nifty mover. It's holding up almost 5.5% as we speak. And of course, ITC, there has been no change in taxation, and that really has come about as a positive right now. But Sunil, let's get in closing thoughts from you. As an equity market watcher, nothing changes. Today's knee-jerk reaction beautifully absorbed. And from tomorrow, it's going to be business as usual.
So I think, time and again, we keep on answering the same questions last 20, 25 years, and it's always been business as usual. The only thing is, I think, what we are banking on as equity investors is how is the economy going to do over the next 5-7 years. And I think that has clearly been, reiterated in the sense that government is clearly focused on doing the right things in terms of job creation, focus on development, and nothing changes. But as I said, no one likes to pay more taxes. But, if you just calculate, maybe we'll have to, as I said, make 30, 40 basis point more. So it's business as usual. Market needed some reason for cooling off. It has been overheated over the last 3-4 months in particular. And I think maybe this is the reason which would be used for the market to cool off. So I would say that the market will take some time, maybe consolidate at these levels before you have the next move as far as the market is concerned. I think our view is that it's not going to be the same kind of markets as we have seen over the last 3-4 years. But looking at India's growth trajectory of 7-8% and 14-15% profit growth, I think the returns would be commensurate with the growth in the underlying, profit of your companies. So to sum it up, it's business as usual.
Okay, Sunil, Prashant, Purinju, all of you, thank you so much as always for taking the time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.